I'm 23 years old. I make a living trading stocks, and no, I'm not a day trader or anything like that. I can tell you guys, I've been doing this for over 7 years. Don't waste your time day trading. Like I'm telling you, it's a complete waste of time. Don't mess with any of those funded accounts, anything like that. So I'm going to show you in this video exactly what swing trading is and exactly what I do. All right, so when we take a look at swing trading versus day trading, they're very similar concepts. But day trading is basically buying and selling within the same day, typically a couple minutes or a couple hours, whereas swing trading is buying one day and holding it for days to weeks. And then you sell that in the future. So this is, a lot more investor focused. It's a little bit longer term, yet I'm still very, very active with it. So if you look at day trading versus swing trading in this way, day trading is a lot more fast paced. It's very active, which means you have to be on the screens a lot more, requires more money to start, and is focusing on a lower time frame. So it's like tick by tick, versus swing trading is a lot more slower paced. You have to be very, very patient. It's less active when it comes to the monitoring. I'll show you guys what I mean when I say I'm pretty active with it, but it's definitely less active than day trading, and then requires a lower minimum to actually start, and you're looking at the bigger picture. Now, when we look at a company like NVIDIA that has some insane growth, we all know, this has taken a long time to develop. So big moves take time to develop. Now, if big moves take time to develop, why would I not focus on catching a trend and catching a very big winning stock rather than looking at it like, on the 1 minute chart and being like, oh, is this going up from here to here? Like this made a 3% move versus looking at it from, the past couple of years. This is up 1,600%, almost 1,700% in the last 3 years. So my goal is to catch the bigger trend. Now, in terms of catching the bigger trend, I still use this very low time frame chart to get an entry. So I create a very, very tight stop loss. Now, I'll show you in a second, but basically what it is that I look for is something like this. If we look at the weekly chart on NVIDIA, you can see this very, very easily. Stocks, they trend, right? So this is a trend following system, the way that I trade. We can see that this stock is making a big move up, and then it pulls back and it starts to go sideways, and we see it tightens up a lot around this area and then continues to trend up. Then it goes sideways a little bit, trends up, kind of chops around a little bit sideways, and then kind of trends up a little bit. And now it's been very, very sideways, and now it's starting to trend up again. So my goal is to find the stocks, when they're on their way up, and then wait for these pullback areas and buy them as soon as they start to continue. So if I were to draw a very shitty drawing of basically what it is that I'm looking for, it's a stock that makes a big move up and starts to coil up like this. So what this is called is like a bull flag, high tight flag, whatever you want to call it. This is a chart pattern, right? So a chart pattern is one thing, but the main thing here is that this move is very, very strong relative to the rest of the market. So when I'm looking at a lot of stocks, I keep my eyes on them during this period, right? This initial move up. Now this should be 30% or more. So if we're looking at the daily chart, this should be 30% or more. We see the stock makes a very big move up and then it starts to pull back. Now as it starts to pull back and consolidate,